Hi Ed. Hi Ed. You can start the webinar.
Okay, let's get started. Hello out there. To anyone watching live or perhaps the recorded version of this, welcome to FX Street. We're going to do a short presentation on technical analysis and on the new book. My name is Ed Ponsi. I just want to give you a little introduction. You may not know who I am. You might have seen me on television, on CNBC or on CNN, or perhaps on Bloomberg television. I've been on there quite a few times, probably around a couple of hundred times on U.S. and on international television, lots of times in Asia. And so if you're not aware, if you haven't seen me before, there you go. So next time, you see me on TV, don't blink. I'm not usually on for too long, but there you are, right? And I'm also an author in addition to being a trader. How did I become a trader? Gosh, I've been trading for 22 years now. And about 20 years ago, I tried to get into the business professionally. I had my first job as a broker 20 years ago. I hated being a broker, but I worked hard at it and I quit as soon as I had a chance to work on Wall Street as a trader. Took a job as a trader on Wall Street for very little pay, really for no guaranteed pay. But it all worked out for me. And these are two of my earlier books. The one on the left, Forex Patterns and Probabilities, probably my most popular book for wily trading. That one, the one on the left, Forex Patterns and Probabilities, it's all technical analysis. And the one on the right, the Ed Ponsi Forex Playbook, is all fundamental analysis. So if you have both of these books, then you know all about Forex. But and I haven't written a book in 5 years, right? The Forex Patterns and Probabilities was about 7 years ago. The Playbook was about 5 years ago. And they're very popular, the Playbook, and they've both been published in numerous languages, more than I can count at this point. It's hard to keep track. The one on the left, this is the simplified Chinese version of the Playbook. And we also have been published in Vietnamese, as you can see on the right, and really lots of other languages too. If you follow me on Twitter, it's Ed Ponsi, EDPONSI on Twitter. And I've noticed a huge influx of folks from Thailand recently. So I probably have been published in Thailand as well, I imagine. I've also been a cartoon character here on FX Street. Thanks to FX Street, I was a cartoon character long ago, and I'm pretty well known for not just for rocking a trading account, but also for rocking the house with a guitar. And that was a very kind of FX Street to portray me that way long ago. All right, and there's the new book. Now, here's the thing. Why would anyone want the new book? I mean, you could read and learn about technical analysis pretty much anywhere. And you know what you'd learn? You'd learn just enough to hurt yourself. Most people who understand a little bit about technical analysis, but they do not understand all of the subtle ins and outs of technical analysis. They're using it incorrectly. They're using their patterns incorrectly. They're using their indicators incorrectly. And they're basically making a mess of their accounts. And then they walk away saying, this doesn't work, right? That technical analysis doesn't work. Well, it actually does work. You're probably not using it correctly. This is something I know. I'm a chartered market technician, CMT. There's only a couple hundred of us in the world. You have to pass a series of tests and read numerous books on technical analysis in order to become a CMT, or a chartered market technician. If you follow me on Twitter, you'll notice that I'm Ed Ponsi CMT on Twitter. right? So I'm a chartered market technician, and you cannot call yourself a CMT unless you have passed all the tests and all the required reading, etc. Now, having read all of the books, all of the classic books on technical analysis, I find they are lacking. And that's why this book was written, because technical analysis needs to be brought into the 21st century. Okay, the old books on technical analysis, they're old, dusty books. They're not bad books, but they're not good enough. Um, some of those books contain charts. They're so old, these books, that they're written in the 1940s and the 1950s, and they contain pictures of charts of companies that haven't existed for decades, companies that have either gone out of business or merged into other companies 20, 30 years ago. Why not update it in modern English, the way people talk in 2016, not the way they speak in 1940, right? Just like I'm speaking to you right now, that's how I write, right? So that anyone can understand it. So if you want to understand, not just understand technical analysis on a basic level, which everyone does that, and that's why they don't make money, because they're using it on a very basic level. Instead of using it on a basic level, why not use it at a CMT's level? If you read this book, you'll know everything that I know about technical analysis and more. You'll know how to actually use these patterns. There are trade setups in here, how to actually place the trade, and when to know when not to, right? There are many, many cases where people see a pattern or a signal and they think it's significant, and it simply is not. Think of all the losing trades you could eliminate if you knew how to differentiate between signals you should take and signals you should ignore. That's what this book is about, right? So it's a comprehensive guide to understanding established trading tactics. It's not we don't break new ground here, but one thing we do is we question many of the things that other books just simply accept. They just accept without thinking. And I want us to be critical thinkers. I want us to think, hey, does this particular pattern make sense or not? I think you're going to see about a half dozen examples in the book where I take something that is widely accepted and just basically explain why it doesn't make sense or it doesn't work. So, in addition to using the correct patterns incorrectly, we have people using patterns and signals that really have no basis in reality to work, and that's a big part of this book. Okay, so otherwise I wouldn't have written it. It took 12 months to write. It's over 100,000 words long, so it's pretty long. And but I'm very proud of it. I think what this does is it basically closes the book on those old books from the 20th century. It's the first true 21st century guide to technical analysis. Now, a little bit more about me if you haven't seen me. My experiences as a trader have taken me to places that I never dreamed I would be. Here you see me at the United Nations. Why? Well, there's always the issue of countries and their currencies. Countries, um, their currencies get into trouble because they pursue policies that are not good for the people. Having a weaker currency is very good for your country's exports, but it's not necessarily good for your inhabitants. And I've dined with ambassadors. This is a dinner invitation to have dinner with the ambassador, the Iraqi ambassador to the United Nations. Of course, Iraq um, has a new currency regime, and so I might just find myself having dinner with the ambassador to Iraq, speaking about, okay, different ideas for how to handle introducing a new currency. So you may not have been aware of that about me, right? But that's the life of a currency trader. I also still love to rock and roll. I've been playing guitar since I was a kid. I've been playing live in bands since I was a teenager. and I still do. There I am backstage. I still play guitar at events that are designed for simply for charity events. One of my favorites is in New York. It's called Formapalooza, and we play at BB King's, which is in Times Square in New York City. And you'll see me playing there about once a year. We have this event where different pharmaceutical companies each enter a band into the battle of the bands, and we have a winner and a trophy. But all the proceeds go to they go to a children's hospital where we have built a music room and purchased musical instruments and also art supplies so that sick kids can have something to take their mind off of their illness. And this is very important. This is what I think from the time I began trading, my mentor Dollar Bill taught me that you have to do things like this. It's that it all comes back to you. He was a big believer in that, and so we're big believers in that. There I am up on stage and wearing blue. We're having a ball, rocking and rolling, and all the money going to the children's hospital and for charity. So you think I'm having fun? I love this. I love having fun. I love traveling. There you see me at the bottom of the Delicate Arch in Utah. It's just from about a year and a half ago. Can't wait to go back there again. Um, you know, the life of a trader is an excellent thing. You can do a lot of good in and out of your community, and you get to see the world, get to do amazing things. It's great. So back to the so just so that's so you know a little bit about me, right? And so just back to the book. Now, if you wanted to know everything that a CMT knows, think about this. When I put this book together, I was already starting to put it together while I was studying for my CMT. So if you've ever considered becoming a CMT, this would be a really good book to read. I wrote about a lot of the things that we need to know to understand technical analysis. I start at the very beginning. Technical analysis begins on Wall Street with Charles Dow over 100 years ago. All right. And I walk you through the beginning of it and how it develops and into all the different things that we use, the different types of charts, reversal patterns, continuation patterns. There's a huge section on candlestick, which is a book in itself. The candlestick, there's 2 chapters on candlesticks that are huge. That is a book in itself, chapter 13 and 14. There's a huge chapter on Fibonacci trading techniques. I'm not just explaining 38.2% retracements. I'm showing you how to trade them. That's also a book unto itself, full of strategies, right? And also moving averages and a lot of different indicators. One thing you might find interesting, complex indicators. That's building indicators out of existing indicators. Point and figure charting. Chapter 21, this is a throwback to the old days on the trading floor. People used point and figure. They would draw it on the back of an envelope, because they didn't have time on a trading floor. They didn't have computers, right? 30, 40 years ago. But a lot of people are looking at point and figure today saying, wow, this really simplifies everything. And point and figure charting, it's not just a charting technique, it's also a strategy. There are built-in strategies to point and figure as far as where to place the entry, where to place the stop, where to place the target. All of that is covered here in the book. So that in itself, chapter 21, is practically a book in itself on point and figure. Also, chapter 22 is basically a book in itself. Chapter 22 deals with cycles and tendencies in various markets, stock markets, commodities markets, currency markets, right? There are certain cycles, like in the US, for example, we're currently living through the election cycle, the presidential election cycle. We have the sell in May cycle. If you want to understand, there's many, many of these cycles. Some of them are extraordinarily effective. Do you know when is the best time to buy oil, right? People we think they're supposed to buy oil in the winter. It's not the best time to buy oil. I'll show you the charts. There's a cycle there that comes into play. When is the best time to lock in prices on certain commodities? right? We're going to show you how that's done, right? And of course, we're going to cover sentiment indicators. Sentiment can also be a contrarian indicator. Like, for example, we cover the COT reports, we cover the AAII surveys that are out every week in the US. Chapter 24, again, this is a book unto itself, Psychological Aspects of Technical Analysis. This is where we get into a topic called behavioral finance. Behavioral finance, you got to understand something. There's so much money involved in trading, right? There's so much money involved in trading that the best scientists, the best psychologists have analyzed traders very, very thoroughly because it's very important to find out what are the traps that people fall into. Now, believe it or not, everything that you and I experience as traders has already been studied by psychologists, and they even have a name for every phenomenon that we face. And I go over this because the fact is, if you know which syndrome is working against you, if you know it and identify it, that's how you beat it. Say, oh, okay, I understand what's happening now. I have survivorship bias, right? Or I'm using one of the 7 deadly sins of psych, right? All that stuff is covered in here in chapter 24, psychological aspects of TA. So some of these chapters are basically like books unto themselves. In all total, there's 29 different chapters on here. So we cover everything pretty much. The only things we don't really get into, the only thing we don't really cover is going to be Elliott Wave, because Elliott Wave itself is a book unto itself, and I mean a long book, right? And frankly, I'm not a big believer in Elliott Wave. I'm not a practitioner of Elliott Wave, and I'm not going to write about something that I don't believe in or that I don't think has any basis in reality. So I'm simply not going to write about it. Okay, so but it covers everything else, right? And that's 29 chapters, 100,000 words. It's like a encyclopedia. So you can read it. It should be entertaining to read, and you're going to learn a lot from reading it. But when you're finished reading it, you can always use it as a reference guide, right? So it should be handy for you for many, many years. Now I'm going to show you a chart next, right? And I want you to know this stock, the stock you're about to see on this chart, was named by Forbes magazine, which is a US magazine. It was named by Forbes as the company of the year for 6 consecutive years. So let's go to the chart, right? And you can see the chart here. This is in the late 90s. This stock goes from 20 bucks to 90 bucks, right? And this stock explodes. It quadruples in a 3-year period. And you might be able to figure out what this is by looking at the symbol. Look at the Q and the exclamation point, which tells you that the company went under, right? But this was the Wall Street darling, and it was named Company of the Year for 6 consecutive years by Forbes magazine. So everybody loved this company. What company is this? Does anybody know? Nobody has a guess? It's Enron. Enron. Now, once Enron peaked, now everyone thought this was a great company. The fundamentals were great. Why were the fundamentals great? Because they were completely made up, but nobody knew that at the time. The assumption was, just like any other company, that this had great fundamentals. So when the stock began to come down a little bit, right? When the stock began to come down a little bit, the analysts said, buy, 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 because the fundamentals are great, and now you get to buy it at a discount, right? So that's what all of Wall Street was saying. Even the company itself was telling its employees to buy, buy, buy as this went down. And for that reason, many of these employees ended up with a worthless retirement account. But you and I, if you understand how to read charts, that is not going to happen to you. Right? It can't happen to you if you understand how to read a chart. And how to read a chart is very simple here, right? Very simply put, we just connect the dots here. And what do we have? We have a head and shoulders, right? That head and shoulders. And there's your neckline, right? And the thing that I love to teach here is it's really easy to miss the breakdown from the head and shoulders. And it's okay to miss it because very often you get a second chance. You see how you get a second chance right here to sell short at the neckline? And that's one of the things that we focus on. We have a complete trading strategy for how you can take advantage of this. So we have that's your entry point right there around 65. Now the whole way down, all the analysts are saying buy, buy, buy. And all the fundamental analysts, even the companies telling their employees, hey, buy more of this for your retirement account. Why do you think they were saying that? They were saying that because the company itself was dumping all the shares that they could. They knew that it was a worthless stock. And this could certainly happen again. We could certainly have another situation where a stock or a commodity, especially a stock, can become worthless. And that's how you not only should you have not lost money on this, you should have made money on this. No way would you have bought this stock. It doesn't matter what the analysts say, right? The analysts were completely wrong on this stock. And that's the important part to remember. So there's that stock quadruples in 3 years. As it falls, all the fundamental analysts tell you it's a buy, buy, buy. The company is telling their employees to buy. If you're looking at a chart, there's no way you can buy this stock. In fact, you would have had to have sold short based on the head and shoulders breakdown. You even get multiple chances to sell short on the head and shoulders breakdown. The stock becomes virtually worthless. It just goes to show you why were the fundamental analysts wrong? They were wrong because there's always something that you don't know. Okay, fundamental analysts gather information. They gather all their information together, but they don't have all of the available information. There's always something that they don't know. And because of that, right, they never know what it is that they don't know. Okay, there's always the danger that you don't know something. Meanwhile, the chart is simply the price. The price doesn't lie. The price doesn't have an opinion. The price forms certain shapes and patterns and usually conforms to those patterns when they're used properly. That's the big difference for most people. Most people use technical analysis, but they use it improperly. All I'm saying is learn how to use it, not like an amateur, but learn how to use it like a pro, right? Learn how to use it the way a CMT, a chartered market technician, uses technical analysis. That's what this book has to offer, and that's why I'm here to tell you about it today. So I hope you enjoyed our little presentation on technical analysis. Again, my name is Ed Ponsi. You can get this book on Amazon.com, right? Whoa, there it goes. You can get the book on Amazon.com and on other reputable websites. So I hope you enjoy it, and I hope you'll follow me on Twitter. It's at Ed Ponsi on Twitter. You can follow me on Facebook, Ed Ponsi. I'm there, and feel free. And I hope you enjoy the book. I really enjoyed writing it. I hope you enjoy reading it as much as I enjoyed writing it for you. All right, everybody, have a wonderful day. Thank you for listening.